Good morning, welcome to Morning Outlook. This is Kim speaking on Friday the 18th of February. So, I was going to say halfway through the month, well beyond halfway through the month. And, well, the same old it seems. It's like Groundhog Day in some of these events. You think that things are going to be solved or whatever else, and it's just another move sideways, particularly with the Russian-Ukraine situation. That continues. So, but the markets are letting their foot off the brakes a little bit, it would appear. Before we look at the markets themselves, let's quick look at the risk events coming out today. So we've already seen UK retail sales well up on forecasts. Positive start for the day for the pound. Later on, Canadian retail sales, never a big mover, even for the Canadian dollar. It doesn't really make much of a movement. Aside of that, US existing home sales, again, very light movement around this. I won't be looking for that. What I would be looking for, if I was still trading at that time, 345 maybe. FOMC member Waller speaking there at 345, 630. Brainard, so you've got a couple of speakers later on this afternoon into the evening, but I'll be done and dusted by then if I'm day trading at all. Right, well I hope so anyway. Hope the positions are done by then. Let's have a look at the markets themselves then, starting off looking at the euro dollar. Well, euro, it looked like it was doing something good yesterday and didn't. Sums it all up. I was looking at it and I was thinking, well, and as I said yesterday, if it breaks this area here, and I still am, is looking at that 114 area. A break of that is a little bit more positive. It's currently sitting and trying its best to push up a little bit further. Maybe we'll start seeing it move up there, but there's a lot of different levels now which are sitting and causing resistance. We've got 113.80, so it needs to, for me, pass through these levels. Then the next level, 113.86, then you've got the double tops there at 113.97. So ideally, I know it's 30 odd pips away, but a lot can happen in those 30 pips in that range. In other words, it could just stay in that range. But I would be much more bullish at that point. At the moment, still could be quite bearish with a daily pivot below us. Looking at what's happening at the moment, if it was to start selling off, if it ran into something and started rolling over, that would certainly be a target. Okay, euro, pound. The pound has been in an awful mess. It's the last couple of days it's picked up a lot better and starting to push up, pushing back into the prior highs here, and it's stalled things yesterday. It was looking quite healthy at one stage, ran into its weekly one, and that put an end to that. I think it was less than a pip short of it actually, but looks like it actually hit it on here. Anyway, so there we are. It pulled back from that. However, I think on the two European majors, this looks the more bullish of the two, and we might see some more upside. It's already bounced off its daily pivot here, retraced the daily pivot, bouncing off R1, sitting up at 36.50, has less resistance sitting above, and we'll look at this post 8 o'clock to see if there's an opportunity to get in long. Dollar yen. Yen had been gained a bit yesterday. Trading wise, very difficult, as I said many a time here, to get a handle on it, but it does seem to be moving a little bit out of the range, and perhaps on the short term at least may give some opportunities. But it's broken its downward trend here, and looks, well, a break above the 115.28 area, somewhere in that region, would be a sort of more of a bullish move to the upside. But at the moment, say I'll probably steer clear of trying to day trade it, but it's getting better. Aussie dollar. So Aussie dollar, higher lows, trying to push in through there. Again, it's a bit like the pound. It's doing slightly better some of the other majors against the dollar. Tried its best to do something here. It has got this resistance level around about 72.20. A break of that would see it sort of open to the next sort of next highs there. You can see how messy it is around this area here. Really, it does need to break, and maybe even a little retrace or something. But daily wise, it's already nearly into yesterday's highs. It's almost into its R1. Could have a reaction off that level and those prior highs. So, but a break beyond that, it will certainly make me look a bit more bullish. Okay, morning Joyce. Canadian dollar. Canadian dollar remains in its consolidated zone, struggling here to do anything. Again, if it gets a bit more strength, maybe it'll break these lows, but it's got quite a bit to do. It's just been so slow. You just see how many times it's come down to this sort of level here. I saw this on some of the intraday markets yesterday. They're just, well, this intraday market, but it just looking so uncertain in terms of there's obviously a supporter in that area for the US dollar. It's pushing back each time, and if you look at the S1 today, it sits right bang near all those lows. So don't have a great deal of hope of that actually passing that level. Okay, for now anyway. Maybe it's got to at some stage, or perhaps it won't. Perhaps it will just bounce. Okay, looking at the commodities, gold. So gold had a good old shove up yesterday. Again, the risk factor sort of coming into the market somewhat. We've got a bit of a bearish bar there on the 4 hours, bit of a reversal, but as long as it can hold up where it is, it will be okay. Quite ugly down the lower time frames here. It's sort of a bit of divergence across the highs there, consolidation around the low of that recent bar. We'll see how it deals, but I wouldn't want to be the first to be shorting this at the moment. It's got too much upside potential with everything going on. It might be that even from somewhere near where it is, it's got potential for a further push up, but I need to come out even further to look at next levels in terms of its around about 1920 area, next level of resistance, and next possible target area for the upside traders, for the bulls. Okay, it's gold. Let's have a quick flick through our markets then. Now, Bitcoin. Apparently, Biden's going to be signing some executive order on Bitcoin today, later. It's not helped things. It's also sellers coming in there quite strongly. It's given us a lower high at the moment, so instead of taking the highs out around about 46, it's broken to the downside on news there, and it's looking quite glum when it's sold off here. It might try and do something here, but it might have more of a correction to the downside. Certainly doesn't get me sort of wanting to open the coin book and do something. Ethereum, again, quite a followed the suit there. Hadn't quite broken the lows there, so it's probably forming some sort of triangle, and the bigger, shorter time scales will be kicking in there. But either way, a break of the lows there, it does then look more bearish. Ripple, similar case here. Again, hasn't broken the lows yet, but they're in the cryptos are in that sort of ranging area where you don't really want to be sitting into holding a position that unless you're in the money. But there'll be better opportunities, I believe, coming up as we go through the year. May have to be a bit patient. Other markets here then all following Litecoin, following the Bitcoin in terms of price action and so on. I think everything's just in a similar place. Little bit of movement going on to the upside at the moment, but to me, and particularly FTM, it just looks like it's going to roll at some stage here. Morning, Jane. Right, let's have a look at the indices then. Starting off looking at the Asian indices, well, gap down, ended up closing up the CSI 300. I still think it's in a a bear area. It's, again, if you look at the weekly picture, you should keep an eye on what's going on here. It just looks soft all of the time. I don't think the move's over yet to the downside. It just still looks soft. Yes, we've had a bit better week for it, but it's hardly flying along. The Nikkei, well, again, another one let's just bring it back down to daily here. Not going too well. Gap down, ended up on its open, but still a down day there for the Nikkei. FTSE, well, we'll see that in about 4 minutes. The DAX, again, gap down this morning, pulling up at the moment. Certain movement down there, and CAC just trying to push up. They're trying to get something back this morning. I mean, the risk comes back on. We could see these markets catch a bit of a rally, but all in all, when you look at most of them, they look quite negative and bearish. S&P's then yesterday, big sell-off towards the end there, and closed, giving us almost another lower high. I just can't get can't get excited, but can't get into these markets. They're just looking far too bearish at the moment. So they're all right for some opportunities for some shorts at times, but big switchbacks. You've got to be very careful. Nasdaq there again, looking like it wants to break out of its triangle that it's sitting in, and down. Well, yesterday did break lower, then gave a lower high now. So sort of the pictures of lower highs coming through this market is just still pointing to the downside. Nifty 50, again, like the CSI and the Nikkei, it's been trying to push up there, but it gapped down to start with and has been pushing up a little bit, but not looking particularly great at the moment. As I say, this market's just looking that bit soft. The FTSE, well, still got a couple of minutes before that opens, but at this rate it's probably going to be opening somewhere where it is now. Right, that's pretty much it for me. I wish you a great day, great weekend, and I'll catch you on Monday. Take care for now. There we go. Morning all.